Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Happy Columbus Day, everybody. It's pretty quiet in the floor behind me this morning, and bond pits are closed as banks are closed. However, equity markets are still open. So let's talk about what's going on in the equity markets. The equity market is still under pressure. However, some really interesting action last week. If you recall, as we came into the markets last week, the NASDAQ was leading, S&P and the Dow were sort of struggling. Monday we saw a little bit of selling, and then Tuesday growth stocks just got slammed across the board, hit really hard, and it looked like, okay, this is it, the end of this sort of near-term bull run. However, interesting thing happened on Wednesday. The selling continued Wednesday morning. However, the market reversed in pretty heavy volume. Now, a lot of things still ended up low, but we saw some pretty good bounces. And what was really more interesting is that the S&P came alive, and a lot of the S&P sectors also got above their 50-day moving average going into Thursday and Friday. Now, argument can be made that the volume wasn't as great on Thursday and Friday as was the selling days on Tuesdays and Wednesdays, and that's true. However, there was a pretty good bounce in a lot of leading stocks. So the question is, what does a trader do in a situation like this? Well, taking a look what's going on in the market, you got to see the NASDAQ still a few points off its highs. That's still a good sign. The Russell 2000 small cap index is also near its highs. We talked about the S&P sectors. A lot of them are above their 50-day moving average. The financials were struggling, and now they're above that. The consumer discretionary sector is above its 50-day moving average. The technology sector, the semiconductor sector is almost at its new highs. So despite the big hit we got last week, a lot of things bounced back. So this uptrend may still be on schedule. So the question is, do you buy the dip, or are you catching falling knives as you try to pick something up here? Well, you need to look at each individual stock. Look how it acted last week. If it bounced off the 50-day moving average, or if it bounced off an important support level, that indeed may continue to be one of your better stocks. However, you had stocks that got hit Tuesday and pretty much splattered out like a broken egg. You might want to stay away from those stocks because they may not participate in the next uptrend. So as always, let price and volume be your guide. Take a look at your stocks. Did they bounce, or did they just fall apart? This may guide us going forward. I expect some more volatility this week. Of course, we got the budget situation in Washington going on, and of course, we got a full week of earnings coming on this week. So again, let price and volume be your guide. This is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great week.